Good morning. It is around 8:20 UTC, Monday, the 26th of August. Really great continuations for Bitcoin. Did everything we wanted to see it do on Friday. Absolutely lovely stuff, and actually holding structure and ranging. So, anyways, we'll get through the whole thing. Looking at the economic calendar, the big thing today, obviously UK bank holiday, so close there. The biggest thing also going into this week is that we start having some bigger data points coming in as well. Thursday and Friday all expected to be better than expected. I mean, whatever the forecast is, we're still looking to target now a September interest rate cut, September 18th, I believe that is, which a little eerily similar to what we saw back in 2007. So let's hope like that doesn't play out exactly to the T. But in any case, GDP stuff on Thursday for the US. We got CPI, Eurozone Friday, core PCEs and stuff like that. Consumer confidence always also an important one, but there's a couple stuff to look out for. Most of the stuff is right an hour before the New York Open. There's some stuff that comes out as the markets open, so Tuesday, Wednesday. But for Thursday, Friday, it should be about an hour before the market opens. We start getting PCE stuff and data like that. So just to keep a lookout on it. Also on the side for the commitment of traders, the CME for Bitcoin, the big thing we have here is that dealers, asset managers still longing, not aggressively so, but still looking pretty strong. Also seeing leverage funds pulling shorts, which is always good to see. Spreads have increased really dramatically since Tuesday. So we'll see if there's, maybe since we've had the move up, we can get some more ranging structure. But for right now, still looking like bullish conditions as asset managers are just full 96% long in all their position sizing. So not going to knock that until it's actually starts breaking down. Over to liquidity and looking at the liquidation heat map here. So we're in a pretty decent range. Range low seems to be around about 63. What is that? 63.4, 63.5. That's holding since the weekend, and we actually range out really nicely. Nice little like 1.5% range, the upside. Did a bit of liquidity grab early this morning, knock some of that stuff out, and now we're building stuff below. Only on a localized failure here do we want to start actually edging back to the downside. We've technically broken some low structure here uh, in the last 15-minute little blocks that we have here, but nothing really higher time frame. If we do have some continuation lows here, you do want to start targeting lower. Yes, you are at the range low. You want to wait for a break of that range before you start targeting that high liquidity zone to 63K and then 61.7. So these are nice little, high leverage pockets. And going back down to this area isn't the worst thing. We want to see nice retests of the previous range at 61.4K. Anyways, going forward to trading light, and we'll look at some of the levels. Yeah, so what is 63.5, 63.6 ish. That's the local range low that matters. We're still holding that pretty nicely. Watch the 1 hour and 4 hour closes. They're still holding that low that we put in from Sunday. And I think that holds, that needs to hold right there, and it still looks good for potential continuation. It's on the failure, like 1 hour, 4 hour closing below that low. Then we can start talking about breakdowns and retesting structure. But for right now, you're in a range. Play it as such. The range is actually pretty forgiving. From the low of the range to the high of the range. Let's see if I can. Yeah, so from the low to the high of the range, you're getting about 1.4%. So what do we know happens from the low to the high? You're taking out 50x and 100x leverage positions, allowing lower leverage, larger positions to build on either side. So play the range as such. You're in a very local one. Watch for a quick breakdown. I would say set alerts for like 63.5, 63.5K, and then 64.5K. That way it's kind of like low range and high range break potential. So you have those at least coming to you. But as far as resting orders goes, we got some knocked out early this morning around 65K. Some further things building above us. It's quite low in position sizing. And we also have some stuff stacking around 63K. We'll see if that actually holds. But for the time being, looking at like the TPO and stuff, we're underneath it. Obviously, we've got a little bit of downside priority just from that liquidity grab, which we saw earlier this morning. So localized failures, you want to see gains at 64K within the range, gains at 64.1, regaining previous value areas, point of controls, that type of stuff starts looking good. Also looking at open interest. Open interest is starting to come off a bit as we're up in this range. So people just taking profits and exiting positions, with the majority of the upside move just causing massive short liquidations. The nice thing is that this is why you wait for a gain. As we saw Friday, massive move up, which then reversed really hard. Everybody smashes the green button trying to breakout trade it. they cause a massive long liquidation event until the gain actually happens about 2 hours later, when we actually gain the structure to go higher. So again, the gains and the losses matter. Bullish back tested continuation, really nice. Finally, looking at the footprint, I've got the imbalances bands on here just to show. We do have quite a bit of stuff here locally. The big thing that sticks out is if I go on a higher time frame, you should see quite a bit of stuff out of position here. These guys are still not fully punished to the downside, so we do have quite a bit of longs here. Definitely that can be used as fuel to the downside. But like I said, if you start gaining 64K, start gaining above 64K, 64.1, 64.2, you might see that short squeeze of like the local stuff, because it is a pretty decent, chunky looking Monday morning 40K Bitcoin longed in this area. And they're mostly punished at this point. However, we are still seeing that there's like, yeah, there's still like quite a bit of the 50x leverage guys in position, but all the 100x's are obviously taken at this point. So you're in the range, play it as such. Looking over at trading view for the game plan in this zone in any case. So kind of recap from last week and the weekend. We talked about the gain. We got the gain. Perfect. Got the close above, bullish backtest, July Q3, gain, continuation to August. Perfect. Really happy with that. Looking at the local game plan. So you're in this range. I would say the big thing here is you're looking to long the lows of the range and short the highs of the range until proven otherwise. Everyone should still be long. All longs are still valid, but definitely have taken profit. Obviously, in these upside moves, they've been pretty aggressive. The breakdowns that start mattering, there's quite a bit of liquidity here at 63K. Basically this here. So as we saw on the liquidation chart, so there's quite a bit of liquidity there, and there's quite a bit of liquidity down low as well. A lot of these breakdowns, if we do start bearish or retesting, creating new lows underneath what we did on Sunday 00 UTC. So that Sunday low there, that's the important thing to hold as far as I'm concerned. If we close 1 hour or 4 hours below that, you are looking for a range break back down to retest stuff, and there's quite a bit to retest. So the stuff still looks fine, even if we do a bullish back test. If we can come all the way back down to 60, 60.5, 60.6. And it's not the end of the world. You just want to see some nice, strong regains of level if there's a deeper back test. The levels that you don't want to lose, 60.6. Yeah, if you start losing that, you're breaking structure, and you're probably looking to target like 59.5K or something. But that's worst case scenario. Priority is technically still up. You've got a pretty solid flag continuing. You do have some resistance built above you. So again, if we run back up here and we're getting some resistance, not a bad idea to start trying to hedge off some of the longs that we have lower, but the priority is still up. Higher lows are good for longs at every single level, right? We come back down, we break a level. If you higher low it, you go back to test the range, potentially break back above it. So 61.4, that's the level not to lose. That's all the way down here. If we start losing 61.4, yes, we can go deeper on a retest, but longs are basically banned until we start regaining that previous range high. So for now, play the range, treat it as such. Later in the week, if we just go flag out, we could start grinding a bit. I mean, it wouldn't be the worst thing if we just start grinding to build out some larger structure. But yeah, for the time being, play the range as it is. I wouldn't expect anything crazy to happen. There's not a whole lot of stuff going on today, but the priority is still up. Easy mode, really, like I said earlier, set an alert for August open, which is at 64.6, and set an alert at 63.5, and that's basically your local range high and range low. Until then, take it easy and catch you tomorrow.